Extreme choppiness, Oliver, going on in the corn and soybean markets, at least so far. Everybody's blaming the low weekly export sales totals, but was the market just all ginned up on the long side on commodity funds, and here we are right at the end of the month? Is that playing a role?
Yeah, I'm sure that's playing a role in a lot of the choppiness that we've seen here today. We started out the early morning session with a little bit of strength in the markets, and we got those weekly exports, and it was a good reason for funds to tie up some loose ends and lock in some profits. We know that they've been pretty healthy on the net long position for the past several months, so that makes sense that they would do this here at the end of the month. And as far as the technicals go, we managed to hold, or I should say are holding some pivotal levels at the moment. For corn, 546 to 550 is really the pivot pocket that the bulls want to defend on a closing basis. There's trend line support as well as a 50-day moving average that comes in on that pocket. So long as we stay above there, I think we're in good shape. But if we start breaking and closing below that support pocket, it could potentially spark some additional long liquidation. Now, as far as the soybeans go, that's where all the action has been today, or majority of it, trading in a 52.25 cent range, but managing to hold significant support. $13.93 to $14 is what we had laid out in our morning grain commentary. That was the breakout point here from earlier in the week. So previous resistance now becomes support. I still believe that the bulls remain in control of the technical landscape so long as they defend that. But as mentioned with corn, if we start closing below that support pocket, you could see some additional weakness sweep into the market.
Well, let's take a look at what's going on in our wheat trade then. We start in Chicago, and in the Chicago May wheat, we're down 12.25. We're at 6.73 per bushel right now, still about 7 cents off our earlier low today. Kansas City on the May contract down 14, Oliver, at 6.49. And in the spring wheat trade, the May contract is dropping 7.5 cents at 6.50 per bushel. So what does that mean on the wheat trade here? Yesterday, we had Kansas City within 6 cents of contract highs.
Yeah, we've made a big move, really kind of a breakout yesterday, and we're kind of retracing that breakout point here earlier today, and are so far defending that. As I talked about with corn and soybeans, we want to defend previous resistance, and for Chicago May wheat, that comes in at 670, a break and close below there, probably drops us back into the range that we've been stuck in for the better part of the last month, which is call it 630 to 670 on the upside. So long as we can defend 670, I think the momentum remains to the upside. We could potentially see a retest of those contract highs at 693 that goes back to January 15th, and potentially out above that psychologically significant $7 handle. But again, defending 670 on a closing basis is going to be very key to keep the bulls in control.